Hi, my name is Alex Carlucci with GustanShow.com at Gustan Show Associates. We specialize in a thing called Chapter 13 mortgage bankruptcy. So if you're in a Chapter 13, 99% of the banks out there are going to deny you. This is our sweet spot. So if you're in a Chapter 13, don't be discouraged. We can do the loan for you. So I'm going to go through some of the steps and requirements for Chapter 13 manual underwrite bankruptcy loan. So let's say that you filed a Chapter 13 and it's been more than a year. That's the first step I have to ask you. So I'm going to ask you, when was your Chapter 13 filed? You're going to say a year ago. The next question I'm going to say is you made the last 12 months payments on time. That's why it has to be at least a year old, because you have to show 12 months payments on time, and it's got to be the last 12 months. So we're going to ask you to get the trustee to prove that, your bankruptcy trustee, to prove that you've made the last 12 months on time. So if that's true, then we're getting there. Then I'm going to ask you how much your bankruptcy payment is. So if your bankruptcy payment's $1,000, I have to hit you for a $1,000 payment. So now I'm going to ask you what your other debts are. And then I'm going to add up all your debts. Then I'm going to ask you your job history and your income. And I'm going to determine if you qualify for the manual underwrite. So there's 3 levels of manual underwrite. There's a 31/43 DTI, 37/47, and a 40/50. Let me explain what that means. 31/43 means that your mortgage payment with taxes, insurance, and everything divided by your gross monthly income, so that's the bigger, now this is before taxes are taken out, is 31% or less. And then your back end is your mortgage payment plus all your debts, including your bankruptcy, divided by your gross monthly mortgage payment, is less than 43. If you fit under 31/43 FHA Chapter 13 bankruptcy manual underwrite, then you only need 1 month reserves in the bank after you close. You don't need any crazy of these compensating factors. So it's a really easy one. If you're doing a VA, and you've been not late on your bankruptcy for the last 12 months and not late on anything else, all I need is 1 month reserves on any VA debt to income ratio up to 54. So VA, we just took care of VA. It's up 1 month reserves up to 54 DTI, no lates in the last 12 months on anything. So let's go back to FHA now. FHA is the more complicated one. So now if you want to go to 37/47, you have to have one of the 4 following compensating factors. Now you just have to have one of these. 3 months reserves in the bank account after you close, after you put the down payment down and pay the closing costs. That's one of them. Number 2, you have to pass the residual income test. It's a little complicated formula we have to calculate for you. 3, you can't have any payment shock, so we're going to have to verify 12 months rent. Now, on all manuals, they want to verify rent. If you live with family, they're going to make you prove that you live with family. So if you don't pay rent, you're going to have what's called payment shock. So one of the compensating factors, if you do pay rent, is $1,000 and your new mortgage payments no more than $1,050, so 5% then or less, then you can count that as a compensating factor. So now if you have 3 months reserves and you're not going much over your current rent, and we can verify your rent, then that's 2 of the compensating factors. So you pass 2 there. So and the 4th one would be additional income that we're not using towards the mortgage. And let me give you an example what that would mean. So if you just started receiving overtime a year ago, we're not using that in your real income, because to use overtime income you have to have 2 years of it, and you have to average it over 2 years. So if you just start receiving a year ago, we'll see it, and the underwriter will see it in your pay stubs, but we're not going to use it towards your income for qualifying because you haven't received it for 2 years. The underwriter is going to say that you have additional income that we're not using, and that's a compensating factor. So that would be the 4th compensating factor. So if you're 37/47 ratio, you just need one of those 4 things. If you go to 40/50, you need 2 of those. All right, so you need 2 of those 4 compensating factors, and then that's how we do the manual underwrite in the Chapter 13. Now, it's always very important to show rent. If you're renting, we need to get a verification of rent. They like to see 12 months canceled checks. If you pay cash, it gets a little tricky. We have a couple investors we could possibly still save it with. But if you prove you pay rent on time, that's a huge thing for an underwriter. If you live with family, they're going to really prove that you live with family. So they're going to say, okay, let's see your driver's license. Okay, you live there rent free. Show me that your mother owns it. Then we get a mortgage statement showing your mom owns it, and then they'll accept it that you're living rent free. But remember, you do have payment shock in that scenario. Now, when it comes to down payment, you're going to have to come up with 3.5% down if your score is above 580. If it's below 580 on FHA, you're going to need 10% down. And VA is obviously no money down. We can ask for closing cost credits just like any other loan. So we can ask for the 6% FHA, and we can ask for the 4% closing cost to credit closing cost. Now, What happens next is that I pre-approve you, you get a contract. Now you take that contract and you take my 1003, which is the application, along with our fee sheet, and you send that to your bankruptcy attorney, who creates a court date with your trustee. So now, even though I'm going to approve you, we have another third party here that's got to approve you, and that's the trustee. So if the trustee sees that you have $20,000 in the bank, and that's what you're using for your down payment and your closing costs, they're going to tell you that they want the money. So you can't be cash rich when you're going to buy a house when it's Chapter 13, because the Chapter 13 trustee is going to want that money to pay off your creditors. So keep that in mind. It's better not to have all the money, but maybe if you have a gift from a family member for the down payment and ask the seller to closing cost credits, that'll help you get through the bankruptcy trustee process. But if there's too much payment shock, the trustee might say no. So if you're currently paying $1,000 a month rent, and now you want to buy a house with a $2,800 mortgage, the trustee's going to say no. You got an extra $1,800 a month laying around, give it to us. So you got to stay within reason, and that's the tricky part of getting approval on the bankruptcy. It's not underwriting, it's not us, it's the trustee. So you got the bankruptcy approving you, and then you got us approving you. We don't want to see NSF checks on your bank accounts, because if that's considered kind of mismanagement of money. So try to make sure your bank statements are clean. Don't have any lates on anything after you filed your bankruptcy. Be on time on your bankruptcy. Have just enough money to squeak in, and not too much money for the bankruptcy to approve you. And hopefully you have the reserves or the compensating factors to get you up to that DTI that you want. And that's how you get into a Chapter 13 bankruptcy with VA-FHA. We are the specialist. Give me a call, 630-915-7550. Or go to gustanshow.com, GUSTANCHO.com. Thank you very much.